Welcome. Right now, Bitcoin finds itself in a fascinatingly tight spot. After a pretty steep fall, the market has gone weirdly quiet, kind of locked in this narrow range. But this silence, it can be deceptive. It's like a spring coiling up, and everyone is just waiting to see which way it's going to snap.
And that brings us to the multi-billion-dollar question, right? Is this quiet period just the calm before the storm? Because honestly, the market is giving off some seriously mixed signals, and today we're going to try and decipher them together.
Okay, first things first. Before we can figure out where the price might go, we have to get a really good handle on where it is right now. So let's map out the current battlefield.
So, for what feels like an absolute eternity in crypto time, Bitcoin has been completely stuck in the mud. After a pretty brutal 29% drop, the market just slammed on the brakes. It's not going up, it's not crashing down, it's just grinding sideways. And that's a classic sign that neither the buyers nor the sellers are really in control.
At the very top of this range, we've got the $70,000 level. Think of this like a major ceiling, or what traders call resistance. Every single time the price even gets close to it, sellers jump in and just push it right back down.
And then, holding things up from the bottom, you have this incredibly strong floor at $60,000. And that's not just some random number. It's a level that is time and again proven to be a zone of really high demand, where buyers consistently step up to defend the price.
So what you're really seeing here is a classic standoff. It's like a high-stakes tug-of-war for control. On one side of the rope, you've got the sellers at 70 grand trying to pull the price down. And on the other, you've got the buyers digging their heels in at 60 grand, refusing to let it fall any further.
Now, this whole sideways grind, it's got a name: consolidation. And this part is absolutely key. Historically, these periods where the market just looks, well, bored, they're anything but. It's actually building up a tremendous amount of energy, almost always right before a huge directional move.
All right, so let's zoom in a little bit. What are the charts telling us? Are there any subtle clues in there about who's actually winning this internal fight?
Well, this is where things get really tricky. The market structure right now is perfectly neutral. I mean, the technical signals are basically arguing with each other. You've got signs of strength for the bulls who want the price to go up. And at the same time, you've got signs of strength for the bears who want it to go down.
Let's break that down. So on the one hand, the bears are pointing to the fact that the price keeps making lower highs. Each little rally is a bit weaker than the last one, which suggests sellers are slowly gaining control. But the bullish case is just as strong. That $60,000 level is like a fortress. Every time the price dips down there, long-term buyers just rush in to scoop it up.
And this brings us to a really crucial piece of context, which you can see in this quote. If you zoom out and look at the big picture, this drop isn't necessarily a sign of a new bear market. Historically, 20 to 30% corrections like this are actually pretty common, and they often just act as a healthy reset before the next major leg up.
But here's the kicker. This internal tug-of-war might not even be what decides the next move, because there is a massive external force looming, and it could completely shatter this stalemate.
That outside force is a huge piece of economic data. Right now, the entire crypto market, and the traditional markets too, are just tiptoeing around, because everyone is waiting for the Consumer Price Index, or CPI, data to be released.
So what in the world is the CPI? Well, simply put, it's one of the government's most important ways of measuring inflation. It tells us how much the price of everyday stuff, like gas and groceries, is changing, and that number heavily influences major financial policy decisions.
And here's the part that's so critical to understand. It's like a domino effect. The CPI number tells the Federal Reserve what to do with interest rates. Interest rates then affect the US dollar. And the strength of the dollar has a huge impact on what we call risk-on assets, like Bitcoin. So the bottom line is, if that inflation number comes in hotter than expected, you can probably expect some pressure on crypto prices.
So all of this really brings us to two very distinct, most likely scenarios that could play out once the market finally decides to pick a direction and make a move. You've got one path for the bulls and one path for the bears.
The roadmaps are actually pretty clear. For the bulls, the mission is simple: break and hold above that $70,000 ceiling. If they can do that, it could open up a run towards $75,000. Now for the bears, their first target is that immediate support around $66,000. If that level breaks, it really opens the door for a slide right back down to test that critical $60,000 floor.
And this is really the line in the sand. I mean it. If that major $60,000 support level fails to hold, the entire outlook for the market could shift, and it would likely signal a much deeper, much more painful correction is on the way.
So if there's one thing you should take away from all this, it's that Bitcoin isn't just sitting still being boring. No, it's coiling up like a spring, compressing tighter and tighter inside this range.
The analysis we're pulling from just says it perfectly. The market is compressing within this range, building energy for a larger move. All this sideways, seemingly quiet action is just potential energy being stored up for whatever happens next.
And that leaves us right here.
This standoff between $60,000 and $70,000, it simply can't last forever. The market is at a breaking point. The only question left is, which way will it go? But I'll tell you this, when it finally does break, you should expect fireworks.